Morning. We are live officially only on onedealaway.com, broadcasting every single morning at 7 a.m. Eastern Daylight Time. My name is Nev. This is Money Matters, where we talk about all kinds of money because it matters. And today we actually have a very, very important episode. We're going to be talking about some news around the world. We're going to be going into the world of tech, world of money, world of acquisitions and mergers and what's going on with loans. Are they coming? Are they not? Who's buying whom? And why does it matter to you? We're also going to talk about some new things that are happening within, well, very traditional companies that have been around here, I want to say, for over 100 years. And the new technology that is just developing, which is blockchain. It's just another proof that this puppy is here to stay, y'all. And we're going to be talking about that stuff. We do have a little bit of a news when it comes to gold, and of course, many, many, many other things, including what the Fed's next move is going to be when it comes to sending you money. So stay tuned for this. Let's do this. All right, good morning. Today is August 4th. It is Tuesday. Happy Tuesday to you. Hopefully, you're having fabulous, fabulous, fabulous week. And let's get started with stuff. We don't have time to waste, so let's do this. We're going to go through some basic big news that are kind of happening, and then we're going to go more in depth about certain topics. All right, so in the first part of the news, TikTok is Microsoft is looking to basically purchase or acquire TikTok, and the biggest reason for it is data and what actually can do in the background. So this is very, very exciting, and it looks like Microsoft is ready to take over Google and Facebook yet again. So the battle shall continue, and this is going to be a very interesting one. Let's see. BP is actually halving the dividend right after reporting the revenue and suffering great loss. And shockingly enough, the stock price went up. There you go. That's interesting. 7-Eleven is buying Speedway gas stations in a $21 billion cash deal. So they're actually going to go out there, and now your 7-Eleven is going to own your Speedway as well. P.S. by the way, I don't know how many of you knew this, but 7-Eleven is actually held by Japanese. That's right, it's a Japanese company. Well, it's currently being held by that. So there you go. We're going to be talking about this I guess we can talk about it now. I was going to say we can talk about it in a moment. But there's a interesting article that came out of New York Times that's talking about the small business emergency loans, but not being what they expected. There's small business emergency loans. You've heard of the PPP, right? The payroll protection plan or whatever they called it. But there's also another emergency plan that was sponsored by SBA Small Business Administration, and it's called EIDL. Sometimes people pronounce it idle. So that is meant to kind of do the emergency loan, and a lot of times those loans can go up to millions of dollars. But because of the surge in it, they actually have reduced it down, putting a cap to about $150,000. Now, for some businesses, that's perfect. That's exactly what they need. For some businesses, a couple $1,000 and will make do to tie them over for a little bit. But there are businesses that have much larger revenue, which means they potentially also have a much larger expense, and capping it at 150, they would get stuff, but the problem is they couldn't close the gap of what's going on, so they are suffering. So that's kind of where the news is kind of coming in. It's a very interesting piece to talk about. Of course, it is problematic. We don't know why SBA capped. I am guessing that it was probably something that had to do with the fact that so many people were going to apply. They didn't know if they're going to run out of cash, which they did first time around, and then there was a giant pause for EIDL. My understanding is that piece is open again. So idle actually is open again. You can apply again. Google invests $450 million in ADT and gets exclusive hardware deal. And ADT, it's that safety and security component. So you know how Amazon has actually gone in and they ended up buying like the security cameras or whatever they have. So it looks like Google is kind of wanting to do a little bit of that, get from just the purely digital into further into our homes. It's going to be definitely interesting future. Which spears, by the way, speaking of Amazon, I don't know if you knew this or not, but Amazon is known now. I don't have any hard proof. It's just more contextual or whatever that word is. Where it's just sort of like a hearsay, so to speak. But there's a lot of individuals that are sharing this that Google has been stealing. Not Google. My apologies, Google. Amazon. Amazon has been stealing from their sellers and inventors. So what they would do is they would see all of the new tech or components that the sellers would put in on Amazon. They would basically look at it, reverse engineering, release it on their own, and literally put their quote-unquote partner out of business. But it gets worse or better, depending how you want to look at it. Amazon has also created this sort of like a VC fund where inventors and entrepreneurs can go in and kind of partner with Google, creating the products and getting, some money and sort of like it meant to be like an incubator of sorts. Except it's not an incubator. It basically, you go in, you put stuff out. Next thing you know is a few months later, Amazon rolls out with your product. You get nothing, they get everything. And of course, they do make some changes and so on and so on, but they roll out your exact thing. Talk about shady business, shady business. But hey, talking about shady business, look at this. Bezos and Zuckerberg got $14 billion richer in a single day. $14 billion richer in a single day. Amazing. Amazing. Now, this is actually very, very exciting. I don't know if you can see the whole thing, but I will show you right over here. So Virgin Galactic actually has built a supersonic, or is building a supersonic jet that is going to be able to fly from New York City to London and from London to New York City in 2 hours. Talk about awesome. Now, that is very, very cool. That is amazing. And this is super awesome. And yeah, they're basically saying that they have a design for a jet that would reach speeds of Mach 3, or about 2,300 miles per hour. I mean, that's like, your face gets splattered right on the back of that seat when that puppy takes off. And that is amazing that you could actually go from Europe to US in about 2 hours. And that is absolutely fabulous. Now, they're saying that would shatter the current transatlantic commercial flight record, which was set by British Airways supersonic Concorde jet in February 1996. That flight went from New York City to London in 2 hours, 52 minutes, and 59 seconds, with the Concorde averaging 1,250 miles per hour, or about Mach 2. So, and this was the Concorde, and this is the new puppy, and this is very, very cool. I don't know that it's going to come out for commercial flights anytime soon, but it would actually be very, very neat. And they're saying it's going to be able only to carry passengers between like 9 and 20 people, right? Like, so 10 to 20 people, and would cruise at an altitude of about 60,000 feet. So not coming for commercial flights quite yet, but it is pretty cool for those that can and wish to pay for private jet experience and jet very, very quickly. I mean, that's so fast, I don't think you can even finish your drink. So that is very exciting, very, very exciting. Additional news, Google Pay Bank accounts coming in 2021 with 6 new partners. So banks are looking to big tech to court new customers, and the list of institutions just got a whole lot larger today. And there is additional pieces that are kind of coming in, which BBVA is one of the individuals, of course. BMO Harris, Coastal Community Bank, First Independence, SEFCU, and so on and so on and so on. So there you go. FinTech is exploding, but not as quickly as this particular news. This was super exciting for me to read about and learn about. And baselining the North American Coca-Cola bottling company supply chain. So Coca-Cola in collaboration with Baseline and Unibright is actually going to go into basically a blockchain for their production. And so this is the in 2019 they actually adopted blockchain in their bottling company, right? And it's running on SAP BAAS platform. Don't ask me what all of that means because I really don't know. I'm still learning, okay? But the exciting piece is that they're going to utilize the baseline protocol. They actually want to now enable a lower barrier network joining process Coca-Cola suppliers. So now they're actually expanding of what they have originally built, and they're actually going to provide an expansion to that piece. And now they're actually going to allow potentially allow for extension into DeFi space and asset tokenization within the whole piece. So it's very, very cool and exciting to kind of look at this stuff. And of course, it is going to improve how Coca-Cola is doing stuff, how they're collaborating. It's obviously going to give more transparency to what happens in the back end. And, now the ability is to also use the invoices to tokenize to actually get access to the short-term cash. So that's pretty exciting news if you ask me personally. But now we actually have a little bit of news about gold. And the gold futures closed at the new all-time high record, record high, even with dollar strength. Interesting. So, as they're saying, it's about the Benjamins, at least for today. It's always about the Benjamins. Come on now. It was dollar strength that curtailed more upside gains in gold, even with moderately higher dollar. Once again, gold gold futures closed at a new all-time record high, an intraday high of just over $2,000, so $2,009.50 at 4:14 p.m. Eastern Daylight Time. So there you go. That was kind of the gold, and I'm actually kind of curious to find out of what the gold price is right now. So we're gonna quickly take a look at that stuff. And the gold spot price right now is 1976. So as you can see, it really hasn't changed much since yesterday. Neither has silver, and the gold silver ratio is still around that low 80s. So we're still looking at roughly 1970, 1980 gold. So not much has shifted or changed there. Now, gold prices quickly retraced once the US dollar index opened for trading, and early gains in the dollar index prompted light selling of gold, that is. Now, this over here is the gold futures, this particular chart that you're looking at. And as you can see, it goes to October of 2019 all the way through August of 2020. All right, so this is the gold futures. And you can kind of see here was that March when we saw the dump, and it kind of went right back up and then continued on going up. And then here is the dollar index futures, and it's a little bit different chart. I wish that they would keep the darn things the same so that you can compare one for one, but they don't. There's that book. I don't know if you have read it, and if you haven't, I highly suggest it. I think it's called How to Lie with Statistics. And it's a book that was written, I want to say, in like 1960s, It's still available. It's a very, very small book, very easy read, short book, but it's a very interesting book for anybody who is looking to get into investing, into business, into money, into anything whatsoever, to learn it, because it really opens your eyes as to how people can actually maneuver charts and numbers and shiftings and lie legally and ethically with the statistics. Well, I don't know that it's ethical if you're lying, I guess. But this would be an example right here, where you take a chart. Now that we're on it, I wasn't planning to talk about this, but now that we're on it, now if you take a chart, right, and you see how you have this chart and then you have this chart, and they're like exact same colors, right, same type of chart, same size of chart. And so very quickly when you glance at it, your eye compares, apples to oranges, and you expect that the date line is going to be the same, because this one is October 2019 until August. But this one is what? It looks like this is 2014. And so it looks like it's from 2013. So even the lines are not the same as lines over here, because lines over here are months, right? So October, November, December, January. But this one is not. Look, this is 2014, then it's April, July, October 2015, April, July. So this would be October of 2013. So it's very, very skewed, and so it's hard to compare apples and oranges. And I know they're different fruit, but give me at least the same scale to measure the darn thing. But now we have a different scale, so it makes it very, very weird. And so right here, right now, you can kind of see how this would be an example of how to lie with statistics by providing exact same chart. It's not the exact same, but like same size, same color, same, right, all of the stuff, but then play around with the dates, or play around potentially giving one linear and one logarithmic, that could really easily trick your eye and your understanding as to what's happening. So you gotta keep your eyes open wide when you look at this stuff and evaluate when somebody's just trying to present something to you. So be very, very careful when you do that stuff. But okay, so early gains in the dollar index prompted light selling, and then they're saying that currently the US dollar index is fixed at about 93.495 after factoring in today's advance of 0.174 points, or a positive 0.19%. Now, what he's saying is that we could see more downside pressure for the dollar in the coming weeks and months to come. Traders have witnessed the dollar in a technical free fall. However, they're also comparing to kind of where it was in the free fall in the 2000 and 8 and 9 kind of piece, where it went down into the 80s, only to swing back around in 2017 and then jump to a narrow range between 94 and 97, and then surge to above 103. During the week beginning March 16th, traders witnessed one of the largest single week drops in the dollar, moving the index from just above 103 to 98.54. This is right that one went from the high down to the low, a decline of approximately 5%. Recent gains in gold since the middle of March can be attributed by a renewed interest in the safe haven assets. And so you can see that right here is where we talk about the 2017, when it actually went up into the high 103 component. And then, we kind of came back down, went back right up. But as far as I know it, our government actually wants, if you listen to President Trump, he wants a cheaper dollar. The reason he wants a cheaper dollar is so that people would want to import stuff from United States. And so that's his strategy of what he wants. He definitely got a little bit of that, but we'll see if that is going to continue or not. I got nothing to tell you whatsoever, so I have no clue if he's doing that or not whatsoever. So let me know what you think in the chat. And by the way, if you're watching this live, welcome, welcome, welcome. Thank you for joining me, and make sure you stay till the end, or after the end, I guess, for the live Q&A. For those of you watching on YouTube, thank you very much for that. Do hit the subscribe button, the like button if you're enjoying the show and what you're learning. Hey, I think that the line with the statistics is the one thing that for sure should or could have earned that like. So, anyways, I think that we have more important news, and that is one of the things that I think it's interesting for you to know is that there's another potential reason why we, or could we potentially, that is asking a question: are we hitting a market top? Another market top indicator: blank check IPO issuance explodes. So what in the world is this? That is the question you might be asking. Hold on, water. What is a blank check IPO? Well, you actually could learn about that today. And that is exactly what we're going to talk about. We're going to talk about the thing called SPAC. It's a special purpose acquisition company. So it's a special purpose vehicle. It's a company that basically one gets started, lists without any assets or anything for an IPO, uses IPO to collect the money, and then with the acquisition goes with the money goes and actually acquires a company or merges with a company or takes over a company. So many different ways to do it. So let's read about it. Let's all learn about the SPAC, because I think it's very interesting. Over the past year, there has also been a veritable explosion of blank check companies, which are shell companies that have no operations but plan to go public with the intention of acquiring or merging with the company with the proceeds of the SPAC's initial public offering. SPACs usually surge near market peaks, and June fund manager survey from Bank of America found that the record of 78% of Wall Street professionals believe that the stock market is overvalued. And we've talked about that already in one of our episodes, and you can always go back on YouTube, on Money Matters, and actually go and read that. And of course, it is going to be in a June section. So definitely go back and learn. The last time we saw such a surge of SPAC was in 2007. What followed 2007? Well, 2008 and the crash that came along with it. A SPAC is a blank check company formed with the intention of acquiring or merging with another company. Acquisition within 2 years of the capital raised acquisition must happen within 2 years, or the money raised has to be returned. Now, according to Goldman, completed SPAC offerings currently searching for acquisition exceeds $38 billion. Now, because the acquisition target is unknown at the time of the IPO, potential value creation is completely dependent on the ability of the sponsor to identify a target. So a sponsor is basically a person that kind of puts the whole thing together, right? Puts the deal together, idea together, rolls it out into the IPO, and then starts shopping. That's basically what they do. Once the IPO is complete and the SPAC sponsor, now with millions in fresh funds in the bank, finds a suitable target, he or she negotiates a non-binding term sheet. Transaction is that announced to the public, and an 8K is filed. It's an official form that one has to file. It's sort of, I want to say it's a partnership, but don't hold me to it. So do research it, okay? Then they go in, they vote. If everybody votes, everybody's happy that they file a proxy with SEC for all of the voting. If the vote goes through, then they continue. If the vote doesn't, then the deal falls through. They have to repeat it. So anyways, once it does go through, SPAC offer companies a PAC to the public market as an alternative to the traditional IPO. So like, why would people do it? Well, remember, when you have a traditional company, a traditional IPO, you actually have to have a business of some sort. Now, it doesn't have to be a profitable business, and it actually appears the less profitable it is, the more successful it's going to be these days, and more money is going to come your way. As crazy as that sounds to say, but evidence keeps pointing out that companies that don't have any sound money whatsoever tend to perform incredibly well when it comes to stocks, and people want to buy things that are bankrupt and broke. So there you go. There's a future out there for everybody to go out and list and get an IPO and collect cash from the public that is desperate to throw it at failing companies. As horrible as that does sound. Now, so you don't have to have basically a company. You just have to have an idea, put the deal together, do a little bit of paperwork. Of course, you got to do some legal and financial and that kind of stuff, right? You got to register, but then you roll that puppy out and collect the money. And then once you have the money, you can go shopping for a company. It's a very, very interesting and very lucrative deal. And we're going to see more and more of that. We just talked about all these acquisition. Remember, Microsoft getting into the TikTok, mostly for the data and all the other stuff in the tech. Then we have the 7-Eleven getting the Speedway. So we're starting to see bankruptcies, and we're starting to see mergers, acquisitions, and hostile takeovers will be coming soon as well. So get ready for that stuff. But of course, SPACs are coming in. Let's continue learning. In the traditional IPO process, issuers are prohibited from including any forward-looking guidance. So investors are required to evaluate the merits of an issue based on backward-looking results and their own expectations, right? So you look at the stuff, you look how they have done historically, and then what potentially could they do in the future, and then you invest based off of that. A SPAC is different. The due diligence process allows a target company to present forecasts and enhance the ability of a SPAC to acquire early stage companies or those with complicated business models. So they basically use this stuff of, they're saying very useful. It's right here. I don't know why I didn't highlight it, but there you go. Let's take a look. This can be very useful in a business like sports, betting, cannabis, let's just call it weed, y'all, electric vehicles, and other nascent industries that lack meaningful comparison in the traditional IPO market. So, a second piece that is also makes a difference is in a traditional IPO, the amount of new capital raised is limited, typically 20 to 25% of the value of the company, right? She can't raise more than the 20 to 25% of value. Now, if the value goes up and you can figure out how to create valuations, which is where the private bankers that help you go with the IPO rollout, JP Morgan, can kind of help you out with some of those things, right? I don't know why I forgot to mention SoftBank, right? They also have been involved in very, very many ethical deals, haven't they? Yeah, not so much. Wirecard, not workspace or whatever it's called, that also, giant fiasco. Anyways, in a SPAC, transaction has no limit exists on potential proceeds. So because of that, you can acquire minority, majority interest. It doesn't really matter. You can raise any size whatsoever. Goldman analyzed 56 SPACs, and they're saying that tech and industrial dominate targets, followed by energy and financial. So you can see it right here, where you can see the information technology 29%, industrial 28%, energy 16%, financials 8%, and then you have smaller, and you will see healthcare, consumer discretionary, materials, consumer staples, utilities, communication services, and real estate. It's like basically so small that it's a zero. They're not interested in that stuff. They're going for tech, industrial, energy, financial, and then everything else after that. The typical deal value was 920 million, as they were looking at kind of what has happened in the past. And just like with the regular IPO, SPAC returns are a coin toss, and since they tend to underperform the broader market several months after the merger and after the initial euphoria phases, one might as well just buy SPY, which one might as well just not even get involved in any of this stuff, because at the end of the day, again, it's the sponsor that makes the money, because they take 20% off the top right away and then on an ongoing basis. So again, all of these things that roll out, this is one of my challenges that I personally have with with Wall Street Casino is that all of these products, all of these ideas, all of the stuff that rolls out is always structured for the guy that just goes out there to make money, and the public that goes in it typically ends up getting hurt. So that's the problem that I have with it. That's the reason why I like the other components as well, and different ways to kind of build stuff, from crypto stuff to real estate to gold, to that kind of stuff. Again, I'm not saying you can't make money in Wall Street. Many people have, but I just don't like the proponent of win lose. You know, I like looking at businesses and strategies and deals where everybody can walk away feeling a winner, right? Everybody, it's not a zero sum game. Everybody can win. When I look at the deals within real estate, for example, when I purchase an asset and I purchase it intelligently, I win. The seller wins because they wanted to sell it and they did. The renter wins because they have a new home, new place to live. The government wins because I'm paying taxes. The insurance company wins because I'm paying insurance. You see what I'm saying? Like, it's a win all around, and that's the exciting piece. In a stock thing, if I go long, you the shorter loses. If I go short, I potentially could lose if everything goes long. The CEO decides to do something stupid, like whatever, put a remark that is inappropriate publicly, or sleep with somebody outside of marriage, or and I'm not judging any of that stuff. Do your own thing, but the problem is that there's a reaction to that component, right? That creates the stock market all of a sudden to tumble, and you have zero control over any of that stuff, right? So that's part of the problem. Now, let's finish with the most important article of them all: the Fed's grand plan to send money directly to Americans in the next crisis. And you know what? They're talking here is like next crisis, 10 years from now. I am thinking this puppy is coming in like, few months, maybe few years at most. The Fed is desperate to ignite broad inflation, as that is the only way that the countless trillions of excess debt can be eliminated, right? And I agree. But they're failing miserably. Why are they failing miserably? Well, because they keep giving money to the wealthy who don't really need it. And they don't trickle it down. We need to stop with this trickle down economics, because it's not trickling and it's not going anywhere. They take that, they pump it into the asset prices go up. Everybody else basically loses twice, because they didn't get any assistance, their income didn't move on up, and now the assets have moved on up, and if you didn't participate early enough, didn't hold it, you end up losing, putting even a wider divide between you and ability to get the asset. The easiest way, the best way to do this, and I mean, every economist knows this, everybody who has 2 ounces of brain knows this, so I don't understand why all of the brain power in the government, in the central banking, all of that stuff doesn't get it. You send money to the public goes consuming creates inflation, you solve the problem. This problem could have been solved months ago. You send money, plenty of money, to everybody, you put everybody on a monthly budget thing where you just keep on shelling out money directly to the consumers, they will continue consuming, businesses end up doing okay, everything lifts up, it restarts the economy, problem solved. That's just my 2 cents. I could be wrong, let me know what you think. But let's keep on reading. Deflation is now a direct function of the Fed's unconventional monetary policies as the lower yield curves slide. The lower the propensity to spend, in other words, the harder the Fed fights to stimulate inflation, the more deflation and more savings spurs as a result. Basically, the same thing that I said. I think I just said it cleaner, maybe. I don't know. Maybe I didn't. The Fed has tried to short-circuit this process, and in conjunction with the Treasury, it has launched helicopter money, which has resulted as a direct transfer of funds to U.S. corporations via PPP loans, as well as to end consumers via the emergency 600 weekly unemployment benefit, which are no longer there. Water. And there's no news about it either. That's the sad part. The economy was desperately in need of a massive liquidity tsunami. The funds created by the Fed and Treasury did not make their way to those who needed them the most, end consumers, you and I. Two former central bank officials, Simon Potter and Julie Coronado, basically gave in their own opinions and things. They too propose creating a monetary tool that they call recession insurance bonds, which draw on some of the advances in digital payments, which will be wired instantly to Americans. Congress would grant the Federal Reserve an additional tool for providing support, say a percent of GDP. Recession insurance bond would be zero coupon securities, and then the Fed would then activate the securities and deposit the funds digitally in the household apps. So the Fed would buy the bonds quickly without going. The Fed could buy bonds quickly without going to the private market. The bonds will be on the asset side of the Fed's balance sheet, and the digital dollars in people's accounts will be on the liability side. And that, in a nutshell, is how the Fed will stimulate the economy in the next crisis in hopes of circumventing the reserve creation process. It will use digital money apps, which explains the Fed's recent fascination with cryptocurrency and digital money, to transfer money directly to the U.S. consumers. They have been talking about it. Many people don't know. I think I've shared this with you. Maybe I didn't. But many people don't know. When the first stimulus piece kind of came out with the $1,200, the original piece actually did talk about the FedCoin, or the direct kind of like using the digital coin piece, but that got taken out, completely deleted, eliminated, never to be mentioned again up until now. People are talking about it. So I do fully expect that this is going to be one of those future pieces that is happening. It's probably going to be a little bit of a hush until it's rolled out completely. They're going to have to kind of think through it and potentially do the test net. Gosh, I hope they do testing before they just roll it out and test it on us. But then after that, I do see it kind of coming out. It makes it so much simpler, right? You create a bond, kind of like a war bond, but it's a depression bond maybe, and it rolls out. You take that, use that, push the money in, press a button, and everybody gets the money in. And now we have our cash ready to go and move about. It's going to be interesting. I think everybody's going to have to adopt some sort of something. I don't know what wallets and that kind of stuff. So don't ask those questions. I think it's more of the bigger idea stage where we are right now. Who knows? This could be part of what the government is working on. It's just not public knowledge. So they could be much further along than just the general idea stage. But I don't know that at the moment. What they're saying is that this is the most efficient from macroeconomic standpoint in supporting spending and confidence. By getting money to consumers, you can limit the depth and duration of a recession. You could actually generate a real inflation that, if that's what you want to do, then that is what you can do. So there you go. This actually concludes our conversation today. Thank you all for watching this live, and we're going to go into the live Q&A in the moment. For everybody watching this on YouTube, thank you very much for watching. Do smash that like button, do subscribe, hit the bell button, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.